Hey, this is Scotty from the Gifford Group, and today I just wanted to do a little breakdown on our capital gains calculator, and that can be found on the giffordgroup.net. And if you want to go over to our capital gains calculator, we'll show that. And so today we're breaking down not just our capital gains calculator, but really we're going to be focusing on our rental depreciation capture calculator. That's part of this. So if you do have a rental property that you've owned for quite a few years and you're wondering how much capital gains you do need to pay due to recapture and just your capital gains on that, we're going to break that down. Let's go check it out. Okay, so like we said, on the giffordgroup.net / capital gains calculator, you'll see it here. We have our video we just released a little bit ago about updating the calculator for our single family residence. And if you're selling your home primary residence, go check out that video. This video, we're going to really just focus mostly on the rental depreciation part where you're recapturing. So all you have to do is just check off this box and saying, hey, I do want to include that in the calculator. And then just like before, you're going to enter your inputs up here. So say we sell our home for $350,000, and so we bought it for $125 when we originally purchased the home. It's our cost associated with selling right here. We pick our tax brackets, and that's going to show us, the cost associated with selling and our pre-tax capital gains, our proceeds right there, and then you can put your loan balance in there. And so, but right here is, this is where the bread and butter of the video we're going to be talking about. So this is your tax basis, which is from above, right? It's the one, 175 minus any repairs. And in this case, I put in 25,000. You can put it, put in 35, whatever. And then these are improvements to the property. You redid the kitchen, you put a new roof on, you replaced the toilets, whatever, like substantial repairs you did, not just substantial improvements you did, not just repairs. Because repairs you can deduct, yearly, but really talking about your investment back into the property. And so we have this 140 now, and that's our 175 minus our repairs. Improvements again, and then what's your cost basis? Now this is kind of the most important part. That's going to help you. So your cost basis, remember, is the sales, what you bought it for, basically, minus the land. So like in this case, we said we bought this property for 135, which our 125, we put it up here. But part of that was the land we were buying, right? And part of it was a building. So let's assume that 25,000 of that was the land. So we're going to take that off. And then you can put in the number of years. If you say you own it 7 years. So we're subtracting the land. So this is 100,000, right? So subtracting the 25,000, right? So we're depreciating the $100,000, right? So the $100,000 is our cost basis of the property that we're depreciating, and we're going to depreciate that over 27 and a half years for residential property, 39 and a half for commercial, but it's really just focused on residential. And then so we're picking our number of years we held the property. So over those, this is where the bread and butter of residential real estate, property investment, you get this loss over the years, right? If I own this property, I've taken $34,000 in depreciation, which is a phantom loss, right? It really didn't happen. Part of that loss is just, for you to make repairs in the future, but it's not really something that's happening. Like repairs, you can do that, but this is for like, hey, we're going to, after 27 and a half years, basically the whole building's been depreciated, right? So the building's still going to be standing there likely after 27 and a half years, but, and you can you can deduct any of those other repairs you did along the way, but the building will still be there. And so this is just a phantom loss you have to repay back when you do sell the property. So if you look at that, okay, so, these are long-term capital gains from above. So based off of that 147, we need to sell, we have to pay 21. This is our federal recapture of that. All right. So, and then we have our state in here, and our state was I defaulted it. It's usually defaulted Texas, but I just wanted to have something there. So Pennsylvania says 3%. So there's a 3% there, and then we have the recapture on the state depreciation as well. If it's in a state like Texas, it'll be zero. It'll just be zero. And I can put that in there. And then so this is our total capital gains due. So this is the 21 that from the depreciation we took, and then you got the 8 from federal recapture, and you got your state recapture. So total of that is $35,000 in taxes due. And then this is kind of cool part. This is looking at if you are thinking about doing a 1031 exchange, or at least you want to think about it. Now, a 1031 exchange, which we do have a blog post on, you can check that out on the giffordgroup.net. So if you're taking your property and you're selling it before, there's some time restrictions, but it's like 45 days, and you're going to resell this property to identify it, and then I lay it all out. I think about a total of 180 days total, but like there's just different time frames in there, and so the capital gains can be delayed even further if you put it into a new property, right? So I just wanted to break down like, hey, this is if I don't do it after I pay my taxes back, this is what I'm looking at as far as my net proceeds. But after I pay my taxes, this is how much I'm really walking away with. Um, and then this is how much we're saving. And I went ahead and included $1,200, $1,250 in fees. So because it's going to cost you money to have someone set up the 1031 exchange, because the money's going to an escrow account, and then they're going to pay out of that escrow account. So I just wanted to include something that made at least a realistic picture of that. So it's not just saying, well, I'm going to save, if it was if it was only $1,200 difference, and it's like, well, it's not no point in doing it, right? So this just tells you a little bit about more, kind of explanations of what's doing. It does. You can look at you can put your income in here. Like say, if you make over 200,000 as a single person, and then say, okay, well, do I have to pay the net investment income tax as well? In this case, we would, because it's below that. You could take off your, a standard deduction, and this is going to be the lower of those. So based on this capital gains or your income, it's going to do the math and say which one's lower, which one's higher. Okay, now you owe $1,900, so that should be included now in your capital gains if you do owe the net investment income tax. That's if you have income over those thresholds. So, and then, if you wanted to look at your total capital gains and income tax that was due, so based off of your, income minus deductions, like I said, it doesn't get, it's online calculator that I built. So it's not going to know what your actual deductions are on top of your, standard deduction. So this is just a good guideline to kind of tell you what your income taxes would be. Now, if you have other investments and other things you're doing, other rental properties, obviously I'm not taking that into account. But it's just showing you, it's more to let you know, hey, these are your, what your capital gains are looking at for the property. So, and then recapture wise. So this would just be for the property over here. If you're, kind of an individual, and then on that income taxes over here, and then over here is for the rental property, like your total capital gains over here. So hopefully you found this video helpful. We do have other calculators, our buyer cost calculator. We have our net proceeds calculator on our website too. I can link those below. We have we just did a video on DCSRs, our debt servicing covered ratios calculator. So we're just trying to provide information about real estate. If you are looking to buy or sell in the Houston area, or really looking to get a loan anywhere across the country, we can help you in most states. So our company is licensed in 40 different states. So if you are doing a loan and you are interested in getting a DCRS loan, we can help you out with that. But hopefully this is helpful. If you have any questions, you can put comments down below, like and subscribe. And thanks so much for sharing. Thanks so much for watching.